Okay, this is Coach Mike. We're going to get started with our focus group watch list. You should have already received your focus group spreadsheet, which is pretty much what I'm going to be talking about here. Also, just a reminder very quickly that I will not be available on Monday. I am traveling from Ohio down to Tampa, Florida on Sunday, and for our court appearance Monday morning, flying back Monday evening, and I will be here on Tuesday, so no worries there. But Monday I will not be here, so it's going to be really important that you pay attention to this focus group video. Have your focus group spreadsheet handy, work together in the chat room, and be prepared in case any of these situations come available. Now, I'm going to start out here with Apple. You can see my last swing target, that 109.27. Yes, it got a little bit above it, but as you can see, it's kind of holding right up in that area. With that being said, I think Apple looks like it's had one heck of a nice up run, and that it's going to need a little bit of a pullback, personally. I think that pullback's more than likely going to be to that 102.96 that you see here on my chart. That's Fibonacci extension point, this last high here, the low, the subsequent high. This 101.74 was using this high over here. And this line that you see here, I'm going to switch over to my weekly chart, and that's our weekly swing point, the weekly swing high, the high close from the weekly prior to this breakout. So, what I would be looking for personally, you see how we're kind of consolidating here, is more than likely going to be where you need to close a day down below this visible consolidation. I wouldn't even mind saying that you need to close a day around 108. Yes, I know that's a full dollar move. And in that event, you could feel really good about the 105 puts play I have on the spreadsheet for December 20th. It wouldn't be a problem if you got in that earlier than the 108 even, but a close below 108 would really make you feel nice. So even though I have on the spreadsheet 108.50, that's just the number I use to factor in the estimated price of the contract, the estimated risk, the estimated reward. So, if I see it close below 108 on Monday, and I come back in Tuesday, and I'm probably going to take this swing even if I got to get it at 107.50, just so you know. So it will not be a problem for me at all if it makes that visible drop below consolidation here and you make an entry. Now remember, with these focus group spreadsheets, this isn't a just, buy everything on it. There's specific qualifiers. For a puts play, the resistance listed is your stop. If it goes higher than that, then you don't want to be in that trade. On a calls play, if it goes below the support point listed, well, that's my recommended stop point. Will I always stop out at those points? Not always, but if you're following those trade plans, that's probably where I would tell you to do it. Going to move over here to another chart. This is my 60-minute chart of Apple. Another one I like trading on Fibonacci extensions. You can see here, if Apple started to make an up move, you could play it to this $111.12 target area. Once you cross this 50% line, use the 50% line as your stop. And I think you'd want to play the 110 calls for November 22nd if you were going to make that particular trade. And finally, even though it doesn't look like it's got that much room, it at least has the $1 minimum. Remember, options are a game of $1 moves. So with 109.32 as your stop, any price above that would disqualify the 11.22-108 puts that I have on the list. But this is one, and I'm going to tell you, I wouldn't be one to look to sell it right at this target of 107.82, because as you saw on the daily chart, if we break below consolidation, you could have quite a move down. So I would give it a chance first instead of trying to sell it right at the target, because once you're in the money on those, the time decay is not really going to hurt you much. And if you could make a clear break below it to maybe then use that as if it goes back up above, that's where I'll sell it, because at least you would have hit the target, or still got out by the target. So a few possibilities on Apple, and I think you're going to be wanting to watch this one on Monday. Moving over now to the weekly chart of Caterpillar. Actually, if you guys remember, I had a Fibonacci target area right up here that it came up close to and hit. I removed it just because it was clouding your ability and my ability to read this value. So I've got a couple potential trades. It's actually kind of looks like a strangle trade. And you know, the first one, we're really close to where the stop would be anyway. So as long as it can hold below that 102.37, if it starts making a down move, I actually like the December 20th 95 puts. Even though target might be down to this 82.69, I think you're more likely to come down and do this weekly swing high point. And what I would look for on that, the reason I have the 95 puts is, you know, they're already almost $7 out of the money, and the 90 and 92 just didn't seem as appealing to me personally. The other play I have on here, again with the use of this weekly chart, is for this 115.64 target. If, you know, if Caterpillar busts through that 102.37 and gets to moving, well, it had good earnings last quarter, so you could see something. Just like in last week's video, though, when I commented on the declining volume as it's made the up move, you got a little more decline this past week. So it wouldn't surprise me for eventually, whatever time it would be, for it to start making a down move. And I think this is a good time in the chart for it to do that. So if you're going to take the calls play, you want to use this swing high point that you can see, this W here. You got below it before, but I still would want to use that 99.49 as the stop for January 17th 110 calls. I'm pulling up CVX here, Chevron. You see one of my fib targets here on the weekly. We had hit, got to it, pulled back from it. Even though it pulled back a lot and then went back up, you still got to say, looking at this weekly chart, it looks like it hit it and pulled back from it. So if you get further pullback from it, do not be afraid to take the January 17th, 2015 110 puts, and we might have a fun ride with those. I would be looking probably down to 101.12, but I would still, the reason I want to go 110 is I want to respect this double bottom area, the low close area, where 110 would do a lot better than taking like a 102.50 or 105. So that's kind of what I'm getting at with that one. I want to move over to the daily though, because that daily chart, and we'll go so you can see it, a 6-month daily, just to make the candles bigger. After hitting that target and having a halfway decent pullback, you made a decent up move in the latter half of the week. Doji candle on Friday does not guarantee that it's going to change directions. It says, hey, watch my next candle. If that next candle is up, I say it's game on to this 132.48 target area, and you might want to get some January 125 calls for it. I'm going to move over now to a 60-minute chart on CVX, and what do you know? We had a low here and a high. This low, lower than this low. This high, lower than this high. If I have a lower low, I expect a lower high. That would mean any high that doesn't break this high. And if that's the case, we might have a decent little trade on our 60-minute chart for the 1122 117 puts. Why 117 puts? Man, this thing was kind of loony after falling real hard, coming back as much as it did. 117 gives us our 50% line of these fibs, even though 114.38 would be the target. So I don't think, you know, it only needed 3-4 days to make the up move. Over here it only needed a day to make that down move. I don't want to trade too far out because you'd want the volatility. And personally, I'm just hoping I don't miss this one being gone on Monday, because CVX been a real fun one to play around with. And finally, the 15-minute chart of CVX. Last week's webinar, we talked about the 15-minute chart that I had put on the spreadsheet. It actually told you every step of the way, what you could trade if you were watching that chart. I was day trading other charts, so I didn't make every one of those trades, but come to find out, I don't think anybody did, because everybody's trade plan was, well, I'll just wait for Coach Mike. And, while I do the preparation to do things like this, and I also send out notifications of when I buy and sell, clearly I'm going to not be able to watch and trade every single chart in the market. So I got my swing points up here again. 1 week out, and the next out of the money strike is how you would trade any of these swing points. You see this potential W. If it does go up above, you'd want to wait for a close above 118.98 for your 15-minute chart, and probably look to play, I think you could play the 120 calls and trade it between the lines. If it breaks this line, you're trading it to this line, but if it falls back below that line, get out of it. And if you fail this double bottom, 118.49, I would be looking probably at 118 puts. 118 for November 22nd to down in here. And, simply trade between the lines. So hopefully this week people use this chart. I know last week the chart was beautiful and would have given somebody like 15 different trades if they made every one. I don't think you can efficiently day trade multiple charts over and over and over. So I focus on a couple, and this is one that I don't catch every trade on, but I set a couple broker alerts for a few. But the chart I put on last week's spreadsheet, man, as I went back over it, and even in Tuesday's webinar when we looked at it, it was amazing. But even the rest of the week, how it played out was just phenomenal. So don't be afraid to study this swing points on the chart, put them on your 15-minute chart, and be prepared to trade them. Facebook's still been consolidating down here. I do still think it has the opportunity to pop and move. Before the earnings statement, I actually had a pullback target 71.77, and it went to 71.65 in the after hours of that earnings. So, bit of consolidation. You do have a couple potential trades if you wanted to protect yourself on one. I like the January 17th, 2015 $80 calls. I also have December 20th $80 calls. But I like this one. If you wanted to protect yourself on those $80 calls a little bit, you could look at the December 20th 72.50 puts that you would look at the 71.77 target for. And, plain and simple, if it jumped up above this 50% line, the red 50% line, if it jumped above that, stop out of the puts if you want. I'd probably be more inclined to stop out of them if it went above 78.32 and then ride profit in the calls the rest of the way. But a couple ways to trade that. Not too difficult to read that either. And the risk to reward of those is pretty good. Even with the strangle in general, the risk and reward's pretty good. So here's my 60-minute chart with swing points on Facebook, and what you see here is one really pretty ascending triangle. In the past couple days, people said, man, Facebook's not really moving. It is setting up for a breakout that if it breaks on this ascending triangle, plain and simple, this thing closes a 15-minute or a 60-minute candle, either one, above $76, I think you're at least going to see the 78, what's the exact value here, 78.40, but I wouldn't be surprised to again see 79.63 or gap fill for a shorter term trade. And I actually took that shorter term trade last week, the 77.50 calls for November 22nd. And I think that if you get that ascending triangle break, you might want to look at that if you didn't already get in it. And if you are in it and you like it even more, then you might want to get a little bit more of it. Going to move over here to a weekly chart of First Solar. Ironically, when it went up, where did it go up to? The prior swing low and pulled back. They actually beat on earnings and fell. But if you read the earnings report, they did good last quarter. Doesn't mean they're expecting to do good the next couple quarters. What I have on here is a lottery trade listed, and that lottery trade is one thing I want to explain because we do have some new members. A lottery trade is something where, I mean, we call it a lottery trade because you don't use anything more than you put in the lottery, quite literally. It's one that you can either make a whole lot of money on or lose it all. It's one of those trades where I won't sell it for a loss. It'll expire worthless, or I'll make a lot of money on it. And, I'm looking at the January 17th $40 puts for that 36.13 target. I do want to point out, though, that it's got to get below this weekly close of 48.67, so you really won't know if it's going to do that until the end of this week. But I'm going to take the lottery trade anyway. Because I won't be here Monday, I already put in an order to buy this, but I'm not going to pay anything outrageous for it. I put my order in at 60 cents, and hopefully it'll fill it. But it's a very small order. I would say no more than half the size of a normal position for you. I am going to go over here to a 15-minute chart on First Solar, though, and say there might be something else you want to watch for. After that big drop, it made this double bottom, and if it doesn't drop below 50 bucks, you could end up seeing a breakout to the top side. Now, I can tell you right now, just as a lottery trade, because I understand the risk of losing 100%, and I also understand that if this thing moves down another $14, I'm going to make a whole lot of money on it for those January $40 puts. So if it does hold 50, I wouldn't wait for the W break that we talk about all the time. I would actually try to buy it even off of this bottom and just let it go boom if it breaks the W, because I wouldn't be surprised to see it up at where it opened after earnings, 52.65, but who knows? Could it fill the gap? These solar stocks do some wicked, crazy things, and to trade 1 week out, the $52 calls, they're fairly cheap, about $1.20 to $1.30. Basically, for every 2 contracts you bought of the January puts play, you'd buy 1 contract of these and have the same dollar amount in it. So just a little bit of a lottery trade. I don't want to talk too much about GLD because, quite frankly, it disappointingly made a huge move on Friday that I wasn't watching because I just usually day trade on Friday. But our weekly chart here, nice hammer candle, came right into our target area that we talked about on Tuesday. The risk of the trade I've got on the spreadsheet is a little heavier than what I would normally like to recommend, so I didn't take the time to put it all out as normal. It'd be one that you'd have to trade a little based on your own comfort level, but I do like the January 2015 118 calls. So, if off this hammer candle, if you get the positive move starting Monday, that might be something to look at with it. But man, did it had a huge day on Friday. I can't quite believe it. And what's funny is I almost made a little entry on it on Thursday, and I was going to put it out saying, hey, this is a bit of a lottery trade, a little bit of a risky trade, and it was actually just going to be for the 11/22 112 calls. I didn't think they would have gone in the money the very next day, but sure enough, I wish I would have made that trade alert. I wish I would have made the trade myself. But I am going to take some 118 calls, but understand that they could go down a lot if it retests that support level. So that's why it's not one I really want to quote-unquote recommend. Goldman Sachs, GS. Last week I said we needed to see a little bit more. Well, what did it do? It consolidated. So what do we do now? We say, okay, now we know what we need to see. And what that is we need to drop below this line, about 189.30, 189.50. We need to break below the consolidation. If we do that, even though I made a trade last week, 12.20, 175 puts, I wouldn't mind taking the 12.20, 180 puts as well on a confirmation of the swing, still with that 173.74 target. So keep an eye on GS, because I think that, this key area, this 189.48, until it breaks below that, and I would say the close of a day, you're not going to miss that much of a run if you just let a day close below it to get a sense that, hey, this thing's finally ready to go down. And that's what I'll be watching for to make at least one more trade on it. Lockheed Martin, as I've said the last couple of weeks, I wasn't interested in playing the down move, even though it came, actually my target on it was 193.18. It almost hit it, and it's pulling back, and I think we're at least a day, maybe 3 or 4 days away from where we see where we'd like to go long in it at one of these three targets, the prior swing high, 180.31, 174.11. I didn't want to play puts because in the past the puts plays have been really, really shaky. But I love the long plays, the calls plays, so I'm just going to let it make the fall. If I think it looks like it's going to bounce off of one of my projection points, my pullback targets, that's where I will make a buy. If I did it this week, the strike would be dependent on which one of these areas it hit. But I would probably venture to say that most likely it would be the December or January 190, maybe 195 calls, depending, if it just got into this first swing, the swing high point, I think the 195 calls for December or January would be where I'd look, but I still think it has a little more falling to do. So I'm not interested in trading the fall, just going to wait for it to pull back. UPS made one incredible run, even since before its earnings, but, we had a trade after the earnings for if it were to fill the gap and move up, or after it filled the gap and moved up. Well, there it was, and boom, it took off. Now I think it's going to fall. Because I don't trade UPS with my focus group account, because I'm only focused on a couple of the charts, which is the intention of the focus group, is that you really refine your trading and learn to master one before you try to just be mediocre at all of them. And so it's not one I'm going to trade with my focus group account. I will courteously tell you, or be courteous enough to tell you, that I'm going to trade it with another account. I'm going to trade the 105 puts. I won't be alerting it because I've already got my buy order in for it, and I won't be here on Monday to do it. But I'm just going to take a small little trade, one that I'm not worried if I lose money on, but could just be a nice little thing. I'm only going to look for this 105 area, that prior swing high, this line here where it broke. I'm just going to look for a retest of that. It either does it or it doesn't, but I'm going to stay pretty small in it. Visa, another strong day on Friday, but the volume has really, really declined over the past few days for Visa since that earnings beat and huge run. I want to go back to the weekly chart that I showed on last week's focus group video. At the end of last week, to me it would have been pointless to still try to trade for this, even though it moved up 11 bucks, because we were waiting to see if it'd retest one of these swing points, this big W. So many times we see these W's retested. So this was one, either you were already in calls or you got no idea where the top is. So I'm still just waiting. I liked the earnings report. I like to see that even though it moved up, the volumes declined. And because I like the earnings report, I will play a calls play on the next pullback. So we'll just keep an eye out for that when it does it. Just another reminder, I will not be in the chat room on Monday as I have an obligation out of state. I will be back on Tuesday. So very, very important. And this, another reason why I thought it was important to still get this video out to you on a Saturday. Well, that, and I'm flying out at 9 o'clock in the morning on Sunday, so I wouldn't be able to do it. But I wanted to give you the extra time to plan your trades, because I won't be there Monday to alert trades that I might make off of the focus group list. So make sure you have an understanding of at least what I've put out there. Maybe do a little study on your own, see what you can find, and just be prepared Monday to do something with it. Good luck to everybody, and I'll see you on Tuesday.